Hey everybody, welcome back to another candid conversation with your CPA. Today I have Jeff Tice CPA with me. He's not your Mr. Rogers average CPA, as you can tell from the hat, but I'll let you introduce yourself, Jeff, and what you've been up to, and we'll get into this interview.
Thanks, Raymond. It's really a pleasure and good for you for creating this form and format for people to share ideas and hopefully grow and learn and understand the game. I do like using sports and other metaphors, if you will, because I think the things that we learned in life, and especially teamwork and understanding group goals and getting somewhere. Hopefully, I'll bring some of those things into the picture. But again, really appreciate it. Sometimes I'm referred to as an OG, which can be original group, old guy, or you take your own definition there. But I was fortunate, to be in the right place in my career when Arizona passed Prop 203, and that was right around 2010, 2011.
Okay, so yeah, you've been in it for a minute, and then yeah, before then, tell us a little bit about that transition. It's not every day that a CPA transitions into cannabis business ownership. So how did that go through the just the idea and the whole licensing process to get operational in AZ?
But that's a great point. Sometimes I joke with my high school buddies, if you can imagine. I'm
Yeah.
doing the same thing I was doing in high school, except now I have a license.
That's what he said. To start somewhere.
I mean, all truthfulness aside, is we all evolved as persons and as human beings. I got out of high school and I worked construction for a number of years, and then I guess I was searching, looking around, trying to figure out what's next and what do old guys look like, and what do they do?
Yeah.
So if you can imagine, a 20, 19-year-old guy on a construction site looking around and looking at 45 and 50-year-old carpenters that looked ancient at that time.
Oh
And
yeah.
many of them didn't have all their fingers.
And you still had all your fingers. You're like, all right, I still got time.
So I got out, I looked around and said, well, I think I want something else. And so I migrated into accounting, a lot of different jobs here and there, and studies and focus. I was a photo major. I was a construction management major. I was a political science major. And then I kind of
Okay.
settled in and I said, what does everybody in the world need? Well, they need doctors and they need accountants. What is the only two
True.
things are certain: death and taxes. Yeah.
Yeah.
I think it was Benjamin Franklin who said that.
No, there is a lot of truth to that. And sometimes you do just want a little bit of certainty. You're like,
Right.
okay, well, I know this will be a path.
Well, I married young, had kids, and so the life's responsibilities, this or that. But again, accounting, I went through a program, got a master's, and went into public accounting for a few years, and then ended up at University of Phoenix for a long term.
Okay.
And it's kind of a different change, but I was teaching, I was developing curriculum, I was doing non-accounting things in leases and opening buildings, and it was an exciting place to be in the early 90s. And I'll equate it a little bit to cannabis
Okay.
because yeah, you go, cannabis, what? But in the early 90s, there was no for-profit schools. They weren't really known very much. So, moving out in this new arena that was just starting to receive regulatory approval and government approval, because the government didn't like it because schools were not for profit. They are the hallowed institutions. And so it was an interesting move for me because I started working on the operations side. Like your title says Chief Operations Officer. You probably haven't worked in books in a little while, have you?
No, no, it's been a while since I've kind of hit a journal entry. That so no, you're definitely correct. So you got into the for-profit universities, man. That's a whole nother rabbit hole we
Yes.
could go down because it is new and it should. I don't know how I feel about it. But okay, so you're getting into the operations side of the university. So you're not actually teaching, the students. You're running the business of the university. Is that kind of where you were at?
Well, with a young dad and 4 kids, I had to do both and then some, you know. So I could earn a little on the side teaching at night in courses because that was the University of Phoenix model. And then during the day, I had a variety of positions. I was a chief operating officer at one point. I was a controller. I was the chief accounting officer of some different things. And then I migrated almost entirely out of accounting there, where I was again building. I had to review construction plans, so my construction experience came into play a little bit. And then I had to do contracting and understand legal documents. And then I had to administer or manage receivables. And I remember I know, and this is notable, because the first reason I took my job at University of Phoenix was their receivables. They had about $80 million in receivables, and at least 70 or 80% of that was older than 90 days.
Right. Pretty high risk.
So for those of you out there that are having problems getting your vendors, to pay, and you're trying to get your cash flow coming in. Well, the University of Phoenix hired me to come in, and because their receivables were out of control. And honestly, I knew absolutely zero about receivables when I took the job.
Nice. Must have killed the interview.
So I BS'd him a little bit. Yeah, I'm an accountant. I can sure collections and calculate interest rates and penalties and those kinds of things.
AR aging, hit him with a couple of buzzwords.
Right, right. And they hired me, and I went, oh my gosh, what do I do?
How I collect on 80K past 90 days or 80 million. No, that is interesting. And it just gives you it's a good reminder for the audience too, of just like the scale of some businesses outside of cannabis. I think it's lost on many cannabis operators. They see a 10, $20 million cannabis company, even 50 million, and they're like, this thing is huge. But it's like in the grand scheme of things, like there's much larger businesses out there with much larger dollar amounts that require internal controls and all this stuff to
You're
make sure
right.
everything's dialed in and we're getting the highest valuations. So wait, so how long, what were you doing that up until the
Yeah.
licensing came around in AZ?
I did. I want to follow with that because it's an interesting, I think a motivator for me personally is,
Okay.
first and foremost, I didn't necessarily know what the job was, and I talked myself through the door. Then the next question is I got to be there in a week and a half. What am I going to do? What do I do? Well, I decided a couple of things. I went over to the Arizona State University Library and spent
Love
about
that.
3 days researching receivables, credit psychology. I got templates for letters and forms, and all of the things to implement what the experts had known out there. And
Hmm.
then I created my own little, almost paint by numbers plan to follow what somebody else had developed and put together. So when I at least hit the ground running, a couple of things. I knew the buzzwords, but more importantly, I knew the questions to ask because I did the research.
Okay. The questions to ask. That is good. It's like, how do you find the answers? Ask better questions.
You ask better questions, open-ended questions, that can't just be yes or no. But then I did the ultimate consumer survey. I taught a class in finance, and I stood up in front of the class, and I'm teaching receivables, and calculate interest rates and all of that. And I said, I explained to the students that I had taken a job, and then I asked the question. I said, why don't you pay your bills?
All right.
Think about it. All right. I got all the students in there, and actually I could look each one of them up. I knew where their bills were, blah, 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 blah. And some guy, he raises his little hand, and I'm thinking, well, this is going to be interesting. So, I was going to do the whiteboard and the idea. And he said, why don't you send a bill?
Makes sense.
I went, wow. So a couple of things. Obviously, ask your consumer, what are you doing right? What are you doing wrong? They knew that they weren't paying. So, that was sort of a side issue. Really, the issue was, how do we communicate better? And then since I really hadn't started the job yet, I went down to the accounting department and asked them how they produce a bill, and they said, we don't.
That is a sweet business model. You don't even need to bill your customers and you can still make money.
That's right.
Fucking novel.
Tu- Tuition is due. So,
Unfortunately, you'd be amazed how many cannabis companies also don't really bill on a regular basis. Um, but okay, so that is interesting. So finding, gaps in the process, implementing an internal
right,
control or an SOP to fill the gap.
right. So let me dial that forward to today, because some of you may be asking because you're on receivables and you're going, I don't care what happened 25 years ago, Jeff.
Right, right. Like, how do I get paid today? We have an issue right now with accounts receivable in the cannabis industry,
Right.
and I again, like, I try to pull it up to internal controls on granting credit, but how do you, bring it forward to today to help out our, the current AR issue?
If you want to get paid, a couple things you do. One is prior to transacting with the vendor, you want to give them an example of your invoice. Many times, we're very regulatory, or meaning it's strict, and it has to have certain things on it.
Yep, the legalese are in there. It's compliant.
The number one cause of delays right now in payment is I don't agree with your number. Okay, so we buy $1,000 of products, and then we give them discounts of this or that, and then the payment that comes back, it isn't quite the thousand. Or on an ongoing basis, you say, well, what's so hard to track? But accounting departments really many times have a very difficult time figuring out what vendor A owes you.
Yeah.
And it's not just a dollar amount, because you have to go down detail by detail by detail by detail. So the things you do up front is meeting with that vendor and talking about, the invoices, the terms. Many times I'll ask my clients, well, what are your payment terms? Well,
Yeah. What
what's that? They'll say, well, meaning how many days, same as cash up front, discount for cash, what's your interest rate, things along those lines that say, take a very hard look at how you bill your vendors, and put yourself, those invoices you receive if you sell to other licenses, and say, well, where are the problems that we've incurred? Because many times when you're on the front line, and you're fighting the battle, and you got this freaking paperwork that those geeks in accounting want.
Oh yeah, it's like sales wants to just drive sales and they're like, dude, if I gotta go, I gotta put it into the system and then make sure that billing is somehow connected. Why is billing not just following behind me and making this easy on
Right.
me? And it's same with ops. They want to just produce product or service and they got to pay the team, they got to purchase inputs, they got to cover the overhead. They just want to operate. And then accounting's over here like, wait, we got to close these purchase orders and invoices out. Okay. But
And
yeah, the
people
detail.
go, well, I don't get it. Or accounting tends to be, or that group tends to be the irritating factor.
Oh yeah. We always get blamed in the back office, like a la Dilbert style. It's like, accounting's slowing everything down. And it's like, no, no, no. If we want to get paid, we got to slow things down on the front end, or else we're just giving product and services away.
Right, right. Yeah, I was listening to, my wife's working with an organization that is going through explosive growth, and they're developing their own, HR and payroll process. And so I overheard her talking about, payroll, and if they don't get it just right, payroll's going to come down on them. And which is just it's kind of a funny term, because I had to say to her, well, honey, you do realize that I am payroll on a lot of jobs, and we don't come down with anyone. We're just trying to do our job.
Right, right. Try to get people paid.
It's the evil accounting. It's so I'm going to talk more about that in a little bit. Just what is that function, and where should those fellas be? But we'll
Because
get
you bridged the gap, Jeff, because you were an accountant and now you became a business operator. And so now
right.
you can speak from that perspective. Because I feel like, trust me, like I talk with operators every week, and that's kind of part of my job is to kind of bring them in, figure out where their pain points are, see, explain how we can help them. And a lot of it is education. And it's not just because they're cannabis people, it's because it's a startup industry with just kind of maybe first time or second time business owners. And and to, as you know, as the business hits certain milestones, it gets more complex, and there's just more to account for and more financial reports to do and get the budgets correct and a little bit more consolidations. So on that note, kind of what did you learn, kind of just a specific question of learn from operating your business all the way through to exit? Um, I guess you can touch a little bit on the licensing process too, because I'm sure you had to put together your
Yeah,
business plan.
yeah. Let me dive forward. After University of Phoenix and this or that so I was a CFO at some company, and um, the petition in Arizona was starting to go around. I said to I think he was 32 at the time or 33. I said, Caleb, why don't we put together an application? We can figure this out.
Mm-hmm.
And the first thing out of the corner of his eyes, we wasn't quite sure what what he was saying, because I had of course taken marijuana away from him several times while they were in high school. Now all of a sudden I'm asking him to go in business with me to life for licensed cannabis. So we stayed up late, and what we didn't know, we just researched. It's not that we had this great deep technical knowledge. In fact, so like I said, we stayed up late, we churned and burned, and we had to find investors, and here's where I'll call it, could have been smarter.
Okay. Yeah, I
Because
feel like we all could be a little bit smarter with hindsight, so don't blame yourself or beat yourself up.
you're right. And with applications, you got to get a doctor, you got to have lawyers, you got to have
Every
uh
little
you know
piece of it kind of needs a specialist, like the security guy, then the construction guy, then the insurance guy. You're like, "Ah, I
right.
gotta go talk to all these people and get answers so I can put it on the application."
And if you don't know it, you have to buy it,
Yeah.
meaning the knowledge, which means that if you're going to lunge yourself into this, now we say Google it. Sit down on your PC and just do a solid 8 to 10 to 12 hours of research, before you step forward, so that you're informed, unless you
Mhm.
like to write a lot of checks,
Yeah. And
right?
write them without much like it's more like they're not a confident check that you're writing. You're like, "Ah, I hope this works." But you hit the nail on the head. Like a lot of people do figure it out just themselves. But it is good now that we have kind of these lawyers and specialists. But a lot of those 2010, that was 14 years ago. It's like would have been night and day different, kind of like applying then versus now. That is interesting. How long did the application process take, and how expensive was it? Kind of all said and done, if you don't mind.
You know, that's a great question. It ended up being 250 pages or so. You have to think back in 2012, there were no multi-state operators. If you Googled a marijuana policy and procedure or cannabis policy and procedure manual, you couldn't find one. They didn't exist.
Yeah.
If you Google one now, you can pick one up for some sort of software for 50 to $100 and get all sorts of different versions. There was nothing. We had to make up our own HR manual. Again, I'll go back to my own experience. One of the things I started doing early in my career is certainly any reports, formats, forms, history that I could create. I call it my personal research library.
All
Began
right.
developing that, and so over time, I had a pretty healthy. If I wanted a joint venture agreement, I had a template. If I
Yep.
wanted floor plans to look at, and because all of those things are required in the application. There's
Okay.
there's easy ways that to do that. You can draw a lot of those things yourself, but with floor plans, again, you need to find a professional. But if you know a little bit differently, if you go to an architect, you're going to spend $25,000, and if you go to a draftsman, you're probably going to spend 4 or 5.
Right, right. So like being able to kind of have a little bit of front end work saves a lot of back end costs.
So it took us weeks and weeks, but I want to mention just quickly, I did have a client in 2016. These were two fellows that were going to school, and during their senior year, their senior project was doing an Arizona cannabis application,
Nice.
and they won.
Must have been nice.
So think of that. I guess the moral of any of this is persistence and focus. So that's what happened. And, we watched the little lottery go round and round. I was at my CFO job. I was entirely, this was moonlighting. This was extra hours late at night,
Yeah,
10,
yeah.
11, 12, 1 in the morning. That's what, when you're trying to build and create a company, you have to say to yourself that I'm going to sacrifice for this. You're spending extra time in the weight room, I'll call it.
Yeah, yeah.
If
Chopping
you want to
wood.
be a better athlete, you spend time in there. You want to be a better business person, be successful, prepare yourself, prepare your body and mind to execute at the highest level.
No, for sure, for sure. And so then you go through the application process, you learn it. It sounds like you're coming into business with just a pretty good toolbox of templates and just SOPs and stuff that you've learned or built over the years. So then what was it like once you finally opened up doors and started operating a cannabis company? Because I feel like everybody has this false sense of fun and like, oh, it must be like Willy Wonka's business. You're like, oh, dude, it's a very standard business once you get into the nitty gritty of it all.
It really is. But let me tell you about the gap period.
Okay.
The gap period is when you receive a license.
Mm-hmm.
And that was a very happy day for everybody, as
Yep,
you
yep.
can imagine. And
Milestone hit.
in the back of my mind, honestly, you know what I was thinking was, holy crap, what
Hmm.
now? We didn't have a building, we didn't have a lease, we didn't have $5,000 in the
I
bank.
was saying, did you have any capital raised or
We
secured for the
had
business plan?
we truth be known, this is a true story, absolute true story, and I will say this with the deepest respect for anyone, but none of us had 2 nickels to rub. And we found a friend of ours that happened to have $250,000 in cash. How did he?
Nice.
Let's just say he was involved in the adult entertainment industry.
It's either that or legacy. It's like some of these early day startups are always a good story of like there's a front facing guy, a local person because we need the license, and
Right,
then there's this
right.
mysterious money cannabis guy.
So we literally, because the rules on cash and things were very different, went to the bank, got 250,000 in cash in a briefcase, go down to the state, and had to do some different things with cash that would just be unheard of today.
Yeah.
That's because nobody knew what to do. They would close down areas that can. So, we had to make certain deals, but ultimately when the license came, we needed $500,000 to get open.
Mm-hmm.
And so one of the things, early on in those days, there was no capital markets, there were no investors. I had many investors that ran away because it was marijuana and it was illegal, because it's still only you had Arizona, Colorado, and just a few states,
Yeah.
California, of course. So it was extraordinarily difficult, and we had to bring in a majority owned investors at that point in time, and that's very important for everyone here to understand. So we
Yeah.
got the license, okay. And I'll go back for a minute. Right after we got the license, we met as a group, and we had a CPA, and then pretty much everyone else really had limited business experience.
Okay.
All right. So my partners were a mix of non-professionals or working folks, all very good people, I want to say. But we
Mm-hmm.
didn't know where to go for capital funding. And many of you on here may be saying, all right, where do you go for capital funding? All right, well, my first meeting as we were searching was with a guy, if anyone knows, he's a little better known now. His name's Steve White.
All right.
If
Nate,
you
I don't know
don't,
him off the top of my head. No.
that's all right. If you don't know him, he founded and created Harvest, who sold to
Okay.
True Leaf. So Steve opened or received a license in Tempe, and I received a license in Tempe, and I met with Steve and his partners. And Steve had a lawyer, he had a contractor, he had an operator, he had a very wide, broad mixture of professionals and funding.
Okay.
Okay, so the results of that is Steve's probably worth north of $100 million today, and Jeff's quite a bit below that.
that's that's fair.
The point is you pick your team look at it. You don't pick people who are just like you. Steve's an attorney. And Steve went on, great things. And the reason is they had a good mixture of folks and skills. And Steve was a good quarterback to bring them all together.
Okay. And and then just to bring it back, when you said you got the license and you opened up, did you say you gave up a majority of it kind of to raise the capital? Is that
Yes.
just to clarify? And that is a key thing to bring up because it's people get the licenses and then many of them they still want to maintain vast majority ownership. And I kind of just always use the analogy again, going to bigger businesses. It's like fucking Bezos doesn't own the majority of Amazon. Like he's still
Yeah.
doing fine. Like Zuckerberg doesn't own the
Right.
majority of Meta. Like, so we need to take these concepts and bring them down here where you can still have a good life. But like, if you can't get operational, you can have 100% of a non-operating entity or a minority ownership in an operating entity. Pick your choice. But okay, so
So the
Steve and you both
key,
have the licenses in Tempe.
yeah, you raise a good point. The guys who bought into us became Columbia Care, which was also
Okay.
a very large group, very well funded. We brought them in, and in 2012, when all this happened, there was no alternative capital. The license in Arizona was worth probably 700,000 to 1 million, maybe. Nobody wanted it. No one wanted to be around. But the difficult thing is because of the regulations we were under, different pressure. We had to open by a certain date, so we had to
Yeah,
make the operating decision to lose some control
but
and
get
get
operational.
capital and actually open, or not.
Because we have seen licenses lapse now because as these new markets open up, unfortunately, like we're still doing the same process, even though there tends to be a little bit of like clear holes in it. But yeah, they'll get I call it a temporary or, like just your initial license. Then you still need to
Right.
raise the capital, build everything out to specs, get a final inspection, fire chief comes through. But like all of that takes a little bit of time in building your team out and like partnering with the right people to get them operational because unfortunately like getting the license is not the linchpin much anymore. It's getting
Yeah.
the capital to get operational.
Yeah, you raise a good point in that there are a number of folks that have received a license and then it expires because they can't put themselves together, get the right approvals for the building, and
Mhm.
this or that. Yes, you can manage and you can budget a lot of things, but real estate and finding locations you got to draw the little circles and
Find the green zone.
like, yeah, all that. And we've got a number of extraordinarily efficient and professional real estate groups out there today that can be a big help, very
Yeah,
cost
yeah, they're a big
beneficial.
help for sure.
Yeah, I think. I mean, we had to waste all that time, and I say waste because those guys again didn't exist then.
It's the same with the lawyers. It's like there's whole lawyer teams that'll get you your license for a reasonable fee, and it's just like, oh,
Right.
they didn't even exist back then. And to your point, it's the
It-
same with the sources of capital. It's like you could find it, but like people complain about it now and try doing it 10 years ago. It was even harder.
right.
There
Right.
wasn't advertisements of it with mixers and galas. It's like you literally had to know people that could show up with six figures in cash in a duffel bag. You're like, that is a very small sources
It's,
of capital pool I can go talk from.
it was really a lot of fun to pay our estimated taxes, and or go down to the state, pay sales tax in cash because
Yeah.
again, they didn't have the ability. They didn't have counting machines then.
Yeah, or cash
So you,
machines. So like they just
it's
one person's out there. It's like, oh
yeah,
man,
if you get into 20s or fives, you're in trouble. It's going to take forever, to get through it. But so that
respect.
you raise an interesting point. Is so we were open. Let's just say we opened the first day, and I had the absolute best experience on the first day of business. We had 4 people.
So it wasn't like the line around the corner like it is in some of these
Four,
openings. It's
four
because you were
people.
selling the devil's lettuce. That's
Uh,
why.
and, and the funniest part was that customer number one was a guy I went to grade school with that I hadn't seen in 25 years. So, but maybe ask the question. So why was that? Why was that?
Yeah,
The
why is
best
that the
day.
case? And what has changed since then to when dispensaries are opening up now? Not all of them do have the fanfare, but like the many of them, they have more than 4 people that show up to their store, whether it's medical or
Right.
adult use.
Well, we all know the term, if you build it, they will come.
Yeah.
Field of Dreams, for those that didn't see the movie. But the point, the reason that was so important to me was, other than be extraordinarily disappointed,
Yep.
and just it was a wake-up call. Okay. And the wake-up call is you may do everything in the world, but the world is not going to beat a path to your doorstep, because it's not a better mousetrap.
Yeah.
It's a commodity. And we're not Circle K, or we're not typically we're more, and those of you around, we're the distributors, we're the manufacturers, we're the we'll call it the smaller groups, 5 and under, make up a disproportionate number of the licenses across the country.
Yeah.
Meaning that you've got to be on your toes, you've got to be able to understand everything in your business. And that comes from
No,
being the janitor, to planting the seeds, to whatever you can to absorb that information. I really enjoy that part of this business.
no, that makes a lot of sense. Just especially on the smaller end, where you don't just have endless amounts of resources to just have whole teams do everything. And it's like, well, that's operations job, this is accounting, that's purchasing, that's sales, and they're completely different with different SOPs. It's like starting out, it's like a 1, 2, 3 people will probably do all of the sales, all of the purchasing, all of the inventory management, all of the actual like operational management, plus legal, plus finance,
Right.
plus taxes. And so it's just like, yeah, to your point, you need to know a lot of it very deeply. So then how did you make that transition? And there's a good segue into valuations of just getting the company to the highest value, Jeff, so you can sell it. And then how did you segue out of business ownership to actually valuing a lot of these cannabis businesses?
No, it's a great point. But let me back up for a second. Sometimes
Yeah,
from,
please.
I'll call it that conversion from, I'll call it CPA to owner, is in CPA you learn to cost or evaluate things, we call it. In other
Hmm.
words, and a cost benefit. We're always talking about, does the cost equal the benefit? Does staying out late till 4 in the morning equal the benefit of having your significant other slap you in the side of the head at the end of the
Still learning that one, my
night?
man. Still learning that one. But
So
yeah, cost benefit analysis, some better than others, depending
yes.
on what realm they're in.
So my training, and I would say this to all business owners: nothing happens in your business, nothing, absolutely nothing, unless there is a debit and a credit. Meaning, you
Yep.
spend money, you record money. You do some action, receive inventory, you record inventory. And so that transition for me, helped me to look at how the operations, and to say, well, what's the cost benefit? How do we more efficiently order things? Well, maybe we group them. Maybe we wait, we create formulas for that ordering time. It's bring more of a science and the science of management into the business.
Hmm.
But that when we were in executive meetings, sometimes when I was a chief operating officer or CEO, the CFO wasn't there. And I
Hmm.
would have to make certain that, wait a minute, folks, we need to get it's good for that perspective, because just sending, meaning an invoice to accounting in the background, that's not using your CPA for the right business.
No, no, and I call it finance. It's like once the CPAs graduate to an actual finance professional, like
Mhm.
your finance team drives your profits. Like
Right.
sales rolls up under finance, kind of in a way. It's like sales does sales, but like in some of the larger companies, your finance team tells sales what number to hit. Your finance team tells operations what,
Yeah.
their budgets are to operate. And there's usually a little bit of give and take, but like the biggest companies have finance teams that are just it's like corporate, like the board of directors, the investors, finance. It's like that's corporate. And then there's all of operations below it. And so to your point, it's bringing finance into the forefront. What I've seen is a lot of these small to medium sized businesses, like less than 50 million, there's almost no finance person at the table, to your point, where you got to tell them,
Right.
hey, bringing in this guy in because you or girl, like you want to know the financial data behind your decisions. It'll make it easier. Okay, so you do that instinctively, but now you're trying to like bring that into the world of the cannabis industry of like, because you look at the business transaction accounting, you're like, okay, this is a business transaction. We either sold or purchased. how is the accounting? And then to your point, when you get to the transaction level of your business, that's a pretty intimate detail of your business.
Right. Well, part of that comes around because I saw businesses experience some very hard learnings by not including accounting. Here's just a quick example.
Yeah, so give me a story.
Here's a quick example. I was doing auditing early in the days, and this business had decided that they were going to move from building A over to building B, and then move in a subtenant into their lease. So in other words, they were leasing a nice big building, and they wanted to move, and then they brought in another subtenant who was going to lease it for the remainder of the period. In other words, they had like a 5-year lease. They left after year one, and they brought someone in for 4 years. Well, the gentleman didn't understand that when you sublease a building for less than you're paying, you know where I'm going now, right? Is they had to recognize 4 years of losses all at once. Because if you earn less on a lease than you're going to pay, and you recognize that that loss is going to occur in the future, the accounting rules say, "Man, you got to do it today, man."
Yeah, pull the trigger.
So he had $1 million loss on his financials that he wasn't planning on because of his quote was, "Your accounting bullshit is going to make me lose $1 million this year."
It's like, no, operations wanted to move and operations didn't talk to finance first. And now
Right,
there's this whole thing
right.
that's happening. No, man. No, and we get tough skin as auditors. We just get used to being the bearer of bad news. It's like, oh,
Right.
actually, because it's rare to find good adjusting journal entries, like sometimes, but
Sometimes.
it
Well,
has been my experience.
and I say those things on if you're doing cost benefit. You asked me about valuations,
Yes.
and where we're going with that. And people say, well, how do I get the best value out of this? Well, let me start by, some investors called me one day and they said, we need a evaluation of this cultivation business that we're going to invest in.
Okay.
So I got all these investors over here, and they're looking at a nice, beautiful 50,000 square foot building. Somebody's going to spend $15 million and have a cultivation facility, and they say, we want you to value the business.
Okay.
Give us a valuation. I said, well, what kind of valuation? And they said, what do you mean? So, and there are typically like 3 types of valuations, and one you would use in like, let's say, an estate or in court. The couples are getting
Legal.
divorced, or you need to do, and something like that is 150 pages long. It's a lot of statistical research. It may take 8 to 10 to 12 weeks to prepare, and going to cost 40, 50 grand. So that's not what these folks were asking for. Is what they wanted to know is pull out the crystal ball, and what kind of money is this cultivation going to spit out?
Right.
So they give me something called a discounted cash flow, DCF, discounted cash flow, which is, for lack of other terms, it's just an income statement or a budget or a projection that tells me over time what this business was going to do. Now, sometimes people just say, well, what's the bottom line? But we don't start with the bottom line. Is we have to look at assumptions. And I'm going to throw some cultivation assumptions out here.
Yeah, I was gonna say it's
One is, the first time I did a cultivation, the budget, my their names have changed so much, so bear with me. My lead cultivator, my master grower, came back and said, we're going to have 45 grams per square foot in production, and we're going to be able to turn the inventory 6 times within this space. And
okay.
so I thought, and I'll explain these in just a second. 45, 6 times. And for those of you who know, you go, well, 45 per square foot, 45 grams, want to be very particular. He
Finished
swore up and
package.
down that he was right. And when we did our actual production, it was about 15 to 18 grams.
Okay, so came up short on his, quantity projected.
Huge.
Right. And especially when you like cut your projected revenue by 2/3, you're like, fuck, that really eats into everything.
So we didn't have the production statistics we have today, though.
And all right, so if they you get to harvest, you averaging about 15 as opposed to 45. What do you do then as a business owner? Because it's like you still got to keep the lights on. And so, how did you get through some of those initial trials of like, because this still happens today where they, oh, shocker, they over project
Right.
it. And then it's like either they're not hitting their sales number or their costs are too high. But it's like the middle between that is profit. And so they're getting one of those two numbers wrong, where they either went too high in the revenues or not high enough on the expenses. But like, how do you get through that? So now you're operating, you have the overhead, the building's built, the license is in place. How'd you get through some of those early days?
That's a great question, because think of where those numbers go. All right. And when I say where do the numbers go, is that you as owners take your budget and your projection, and cultivation says 45 grams a square foot. Well, that's okay, $45. Think of it in those terms, $45. But if you only produce 18, holy smokes, you have a shortfall.
Yes.
So you as an owner, you're thinking you've got all this cash coming in, and if you have no reserves, that means you're not paying your creditors, your vendors. It may cut off your fertilizer, your dirt may cut off, your utilities can be shut down.
Yeah.
The partners start to sue you because you lied at 45, or
Yeah,
no,
they
that
didn't get
was
the
just,
distribution check on
that was
time.
your opinion. But when you start talking and take other people's money, that means the rules change. They're not your rules anymore. They're collectively the group's rules. So scamper is the best term, but I'm gonna
Yeah,
say
go
to
on.
you as owners, no, let me just give this one is that you can't believe, first of all, budget numbers. I would say, when I say that, budget numbers in general is I typically, drop 20-30% off the numbers just in my own mind to see if it's within what we call a range.
They are.
Nobody produces 45 grams a square foot. Don't budget that way. Do you want to say that you're always going to be the absolute higher than possible? Under promise, over deliver. If they would have baked into their budget 25 grams, we all would have been going, oh, is that, can you come in at 18? It's just a narrow miss,
Yeah.
and you're improving. But you don't open a brand new facility and think on day one that it's going to operate at maximum capacity.
No, no, you gotta ruin a couple of pancakes to get there. A couple of chef's pancakes before you get to like where every harvest run is kind of pretty dialed.
Our entire first crop failed because, and this was 25,000 square feet. We planted it all at once because no one told us to rotate it so that we would, start harvesting weekly. And because we're a bunch of guys that never grew anything before. And then all of those things to realize, and it took 18 months to 2 years, and then it cash flowed like crazy. It was
Yep.
significantly. So, you asked me that, then, so how did that, how did you move along on that? Well, my partners wanted me out, a variety of reasons, and the most important is Columbia Care like to own everything themselves.
Yep.
And they said, well, what would it take? I gave them a number, and everyone was happy. So they, and ultimately ended, and they went public about 3 years after I left.
Okay. That kind
But
of makes sense. Like they're on that trajectory. You were part of their bigger plan and kind of makes sense.
yeah,
And I would say
yeah.
that's a lot of people's goals in the, operators in the cannabis industry, whether they'll admit it or not. It's like single locations want to grow to be acquired by an MSO. An MSO wants to grow to get acquired by a pubco. It's kind of the way the game's played. So you sold out to Columbia Care, and then how was that process going through the valuation? Because you as the seller, you want to, you're going to say it's worth this much. Them as the buyers are going to try and undercut you as much as they can. So how were some of those conversations, if you don't mind, Jeff?
Yeah, no, that's good. And since I was in valuations at that point, I've been doing this kind of work since the 90s.
Okay.
I That one was pretty easy. I gave him a number, it didn't budge.
Oh, nice. All right.
Now, after that, so I'll answer your question is after that, a lot of license holders uh, began to call me for advice and for either from valuation, strategic planning. What do we do? I want to sell my, my license. So I took a license out on the market 2019.
Okay.
And what I have to do then is I spent a year with their financial statements working for the company to
Nice.
improve their financial reporting, to improve the reports that we could use to show how we were pulling cash out. That's an important point here. How do you go about the valuation? Well, another client, same thing. They said, well, we're ready to go to sale. They hired me and it took 9 months to prepare them for sale. And you say, well,
Okay.
what the hell were you doing, man?
Well, it's like to me it makes sense, but yeah, to everybody, to like kind of some of the audiences, they're like, yeah, like what are you doing? Why does this take so long to get to a price? Can't you just look at find the P&L and hit it with a multiple? No, I'm just joking, but
Well, no. Well, that's what some people do, and they are seriously wrong.
yeah, they get
Uh, I, I, Meaning, when you restate the financials, we look at them, and I know what prospective buyers are going to look at.
okay.
I know how it's supposed to flow. You say flow. A financial statement is in a very detailed organization. There's reasons why you have things at certain places and those in the accounting and finance and understand, and it allows you to, I like to say, I like to scoop out the value. I like to press it out and find it. In order to find that, I have to have good financials. I have to have good cost data. What that means is that you're able to, if you produce a gram of flour, you know exactly what it costs: direct materials, direct labor, overhead,
Yeah.
indirect materials, indirect labor, overhead.
Allocated.
In my time in the last 15 years, I've had three clients that could accurately tell me what their cost was.
Hmm. Yeah, I believe you. And it's like it's not just like everybody will tell you what their cost is, but it's like to actually know it with supported calculations, updated every 4 weeks with a very standard process from an almost independent team member. No, that's it's fair. So there's only three, so not a lot of people out there doing that level of cost accounting, um, which to our like in my mind makes it very hard to run a business because you don't know what your true cost
Right,
is.
right. I'll go back on my University of Phoenix experience.
Yeah.
And in my controller position, I did this pretty detailed cost spreadsheet that could tell me exactly what the break even was for every student in the class,
That
which degree was more profitable.
is funny. It just hurts me to hear the hollowed halls of the university just be turned into a profit generating machine.
That's right.
Um, but no, that's all right. That's all right. What outside of just like not having their cost accounting really dialed in, what are some like things that could hurt a valuation or that you've seen where you're like they're just unique issues that come up in cannabis company valuations that people could be aware of?
No, that's a great point. One of the things everyone can do is you look at your sales report
Hmm.
and you look at the margin on individual products. And many of you do already, but just because you're only selling a few of a product, it doesn't necessarily mean that it's a loss leader or a product that's not providing. And the reason I say that is you look at those that are giving you higher margins and modify some of your sales and targeting specific products, not because necessarily always they're popular, but also you have to look at so what are those margins on those individual products, and if you're only selling 5% of a product, but it's giving you 10% of your income,
Yeah, that's huge.
that it's understanding. So Raymond, the other thing is with your accountant CPA, the thing that hurts the most are surprises.
Yeah, yeah, no, I would agree, especially around tax time or just things that come up throughout the year, each quarter. It's got 4 quarters. It's like we can just not have too many surprises in those 4 quarters. But okay, what type of surprises are you kind of referring to?
Well, several. One group had experienced a fairly significant loss and had filed some police reports that they didn't bring up. And
Hmm.
until later, when things flush out, because nobody likes surprises, right? Nobody.
Yeah.
And that one became serious because some of the employees were allegedly involved. So,
Right. So the buyers don't know who they can trust. And it's like, it is interesting. I guess that's why we have footnotes, in the financial disclosures. It's like, let's just try to paint the picture ahead of time so the valuators don't do it themselves. But okay. So yeah. And then a lot of the surprises can be dealt with by putting them into the footnote disclosures because at least then you control the narrative. To
yes.
start. Okay.
So, getting back on that cultivation group that, they wanted evaluation, where did we end up? But, we ended up nowhere because, I said to him, well, does the company have any revenue? And he said, no, but, oh, they've got these great plans, and, oh, you ought to see their trademarks, and whoa, their brand is killer.
Yeah.
And, I have another client spent $90,000 on brands and trademarks and all of those things, a small single license. And when they sold, the conglomerate that bought them quickly took all those brands and put them in the trash can.
Oh man, no, it is interesting, like kind of spending a lot of money on just brand trademarks, IP, because yeah, you don't know how long that's going to be, and like when you sell it, like they could just put you out of business. But I guess it's kind of like you need to have a brand to get the value up to make it sellable. But that is interesting. Um, okay,
The brand rarely, if you're a national brand, you're not a smaller license. I'm saying that in some cases, yeah, that's a big deal. But let's not kid ourselves with the neighborhood tienda, or a store here in the Southwest, is not going to have a national footprint, or anyone that would be interested in paying a premium for that. My whole purpose in saying that is as you're developing as a business, you have to look, where is truly the valuation, cash flow, your margin. Unless you're AT&T, you don't have a brand that very few people are going to want to pay any level of premium for. It's rare. On one of my sales, the owners created 2 or 3 trademarks and a separate company.
yeah, it almost costs you more to get them value than what they're actually worth.
Yes, the purchaser didn't want them.
Yeah.
Said that, no, that's not worth $1 million.
Mm-hmm.
We don't want them. So focus yourself on how can you be more efficient. Be a cost hawk might be a good word there, and meaning not a penny pincher. That's different. You want to spend where spending is intelligent, and that meets your goals and objectives, and not
Yep.
be wasteful. You buy the best tools, you buy the best equipment, you buy the best product that you can afford, and then you stand by things.
Mm-hmm.
So, maintaining your valuation is maintaining good customers, keeping track. I've got some other folks that they've been in business for 8 years now, and they've never really done a detailed analysis of where their customers come from.
Yeah, yeah, like who they're selling to, and like and that's a whole nother rabbit hole of companies that are in business for multiple years that don't take it to the next step.
Yeah,
They're just like, I don't know, this is how it works. It's like there's so many more, to your point, like layers of value to unlock. Because even, and I find that interesting too, kind of just your take on physical assets versus non-physical assets, and just like cash flows, profit margins, assets, minimal liabilities, like all this stuff helps the valuations and we can't get away from it. And so I kind
right.
of like, I like that because it's like, well, cool, we know what we can build. It's interesting to me when people try to build a business purely off of brands and then value it. It's like, well, like what licenses do you have? What physical real estate? Because like your brand and trademark, unless you're AT&T, like you were saying, can pretty much be recreated. Like if
Yeah,
you're the brand for Canna Curious Elderlies, like there is a dozen of those brands that can be created that technically wouldn't be stealing your IP. And it's the same with like, I don't know, legacy brands. It's like there's so many legacy brands between Michigan and California where like the end of the day, the brand's not really that valuable. It's what
Yeah.
licenses, what's the location, what are their actual revenues of the business if we change nothing. Okay. No, that makes a lot of
People,
sense. I want to be mindful of your time here, Jeff. So kind of just like looking forward on what's next for Jeff and just the cannabis industry as a whole. People are kind of, they're looking about rescheduling. They're looking for more sources of capital. Obviously, the last 3 years have been kind of tough in the cannabis industry, but what is your kind of, you could rub, Jeff's crystal ball, where do you see the cannabis industry going in the future and what has you excited about the future?
when I appreciate that. When we first started in 2012, rescheduling was imminent.
Don't say that. Oh man, I'm from Wisconsin, so I've given up hope as well. I'm like, you just figure out if you want to be in the industry, get in the industry because the government's not going to
Yeah.
legalize for you.
And in those meetings I went to, I started going to MJ BizCon,
Yep.
they started what, 14, 15, right around. Rescheduling was imminent. And then in 17, 18, and went to some different conferences, and rescheduling was imminent.
Or like safe banking was imminent. I remember that was definitely imminent.
Yes, the ink is it's in the pen, it's imminent.
It's so
It's
close.
it's boy, this will be worth a lot because rescheduling will happen.
Yeah.
It's imminent.
Oh,
So in answer to that question, I reviewed evaluation the other day. Okay.
yep.
And I opened up the front page, and it had a $30 million valuation. Okay.
Yeah.
And it's pretty impressive. I'm thinking, wow, what's going on? And I spent about 6, 8 hours reviewing that spreadsheet, underlying assumptions, harvest schedules, conversion, wet to dry, big bud, little bud, trim, ratios, percentages, what's put out. One of the big underlying assumptions they had in there was rescheduling happens July 1, 25.
Right. Very convenient. Mid 2025, right at the end of Q2. Nice smooth transition into Q3. I built some of those myself.
Yes, yes, they were so proud of that. $30 million valuation. Okay.
Yeah.
And without going into this or that or here or there, I do what's called a systematic, rational, reasonable approach to valuation. I look at ranges. It's not a number. The only time you know exactly what the number is when somebody buys and sells and you close that day.
Yeah. Historical. Yeah.
Yeah. After that, everything's moving around. And long story short, when I was done with my numbers, it was somewhere between 3 and 5 million.
So that's a sizable difference where like that's a tough conversation to have where yeah, it's not like they went from 7 to 3 or 5 to 3 or even 10 to 3. It's like they went from 30 to 3. So
Right.
the gap is massive of like what people think's gonna happen and how that'll impact them. And to an extent, for sure. If it does happen, yes, you have more free cash flow after taxes. But you hit the nail on the head with like, dude, it's been imminence for over a decade. And I remember being in Colorado in 2012, like being like, okay, Wisconsin, we are got to be 5 years out. Like it's already
Right.
here in the West. I'm seeing it out in the open. Cops don't seem to mind. No, like we're still freaking 12
So,
years later. We don't even have a medical program in Wisconsin, let
so
alone
a
a
couple
federal
things that,
structure.
what does the future lie? The biggest thing is valuations are really focusing more closely to reality.
Okay, so that's what's
Uh,
going forward, which I guess is better, definitely.
no, it's better, but what I see replicating across the country, it's interesting depending on where all of you are at.
Hmm.
Is Arizona, Colorado, we're a mature market. And so what we've seen is inflated values, the exuberance of a new market. Oh my God, a green rush, and everybody can't wait to go out and spend their entire life savings on cannabis products,
A license and a lease.
the licenses. And so that's developed. And I'll say that this West Coast, we know California is struggling immensely right now.
Yes.
For those of you that know State House, which is one of the largest cannabis chains, for those of you that go even back further, it's Harborside.
Okay.
Harborsite's reincarnation,
Yeah,
and
one of the
they went into
OGs.
receivership, and they are liquidating all of their assets as of today.
Dang. So they even had like a little, Phoenix resurgence and still ended up liquidating all of their assets.
Yes. So what I think we'll see is continue on the newer fronts as states roll out. A lot of excitement. Be careful when you're looking at numbers to really be conservative. I don't think we've been on a valuation trajectory like that, and now we're going to more of, I'll call it standard valuation,
Yeah. Yeah.
things along those lines. Because we're saturated in Arizona, we're saturated in California. Saturated meaning, if you notice, now we've moved from 10 to 15% gains per year. Now, last year actually decreased in sales a little bit because
Hmm.
we reached the match, and each state will go through that. It'll just we've got, I think, 10, 15 years of incredible growth nationwide in this industry.
Nice. No, that's a good way to wrap up this interview. Is keep it at a kind of like a positive. But I agree as well. Is it's we still have well over a decade, 2 decades of just continued growth because even in markets that are open with saturation, they're hitting saturation because they still don't have every city's open because it's still kind of this like guerrilla marketing, aspect of it. And I think that'll continue. So new markets, just whole new state markets will come online, whole $1 billion markets in Minnesota and Wisconsin and Iowa that still haven't come online. But then also within those established markets, like more cities will come online at some point, a little bit more rules will come about for delivery, transportation type companies. I also agree with you. Like, I think we're still a few years off from any like serious federal legalization or interstate commerce. I'm not really trying to play that game. It's just business as usual. We're going to cultivate in one
Yes.
state, produce products and sell all within one state. So population density matters. That's why the East Coast is fairly attractive with many states with 5 million plus population centers. So no, it's going to continue to grow. And but to your point, there's going to be some there's going to be a little bit of blood in the water along the way, but that's kind of part of building any industry is consolidations, growth, death. So no, I'm pretty excited for the industry. Well, kind of Jeff, where can people find you going forward, and what's the easiest way to get in contact you for valuations and whatever you're up to nowadays?
Well, I have a name only website.
Nice.
And my email address is jeff.t@jtice CPA.
Awesome. And we'll have that in the show
I'm word
notes.
of mouth, Raymond. I've got a great group of folks working behind me. I'm not by myself, so I got a great team. And reach out. Be happy to talk with anyone.
Awesome. Awesome. We hear that, everybody. If you have any questions about kind of thinking about getting into evaluation before you move forward, reach out to Jeff. He'll point you in the right direction. And again, Jeff, thanks so much for your time.
Been a pleasure. It's great. Oh, and this is my first grow behind me.
Nice, nice.
That,
Let's say
that
most
was
people don't
ours.
have an actual grow behind them.
All right, good. Well, thanks so much for having me. I appreciate it.
Yeah, yeah. Bye bye.
Okay, take care.